Welcome to my channel. I'm Dr. Romano. Have you ever wondered why do some traders never have the ability to start their own hedge fund? Or what are the reasons as to why those traders have never established a hedge fund or never have raised billions? This is a very important question because for those traders out there, there are many good traders out there, but they don't succeed on actually creating their own hedge fund. And this is one of the issues that I would like to bring about because of the questions that investors ask. Investors ask questions based on what they're familiar with on asking and what the industry asks and what the industry also does. Just because the industry is doing this, before we continue the video, please remember to do thumbs up and subscribe to my channel. It's right there. It doesn't hurt to press that button. Please do it. If you do it, it will really help me out and promote my channel. Thank you so much. It doesn't necessarily mean that it actually has value. Part of me completing a PhD in hedge fund selection is I wanted to review what the industry was doing and how I could improve it. Because I knew that the future was hedge funds. And it was no longer going to be the top 5 investment banks managing all the capital. When I started to realize in the 1980s and 90s, the merger era of all the banks merging together, that was because of government regulation and also interest rates went down to nothing, which caused the savings and loans company to go out of business. So every 30 years, there's a different market cycle that happens. And I knew based on my history and why I love history, is that the industry always changes. Today, the spotlight is on hedge funds, and we're getting away from thinking that they're going to lose all our capital. It's not true. This was coiled by the media because in the media, you only hear about those hedge funds that are going bankrupt. But it's a fraction of a fraction compared to the investment banks that all went bankrupt all at the same time. If it wasn't for our federal government to lend them money, and that was what they were required to do by law. You have to say to yourself, well, so how could I improve the investment selection process? Because I realized it was going to go to the hedge funds. The industry was going to become those mom and pop investment companies once again. And because of that, as the transitions was happening, you noticed that the markets started to become more efficient. You had more companies out there going public. You have more companies making money with the trades. You have more companies doing business. You have more opportunity because you have thousands of hedge fund managers looking for investments based on what they're looking to invest in. You have hedge fund managers out there buying mortgage portfolios of people who defaulted or became past due on their mortgage during COVID. So the creativeness is definitely there, and the industry has so much more talent now trading and coming up with ideas, and this is very important for our future. It's not just the top 5 investment banks coming up with all this, and because of the 5 investment banks, whatever was left, it created a vacuum effect because people realized, well, they knew they had talent, whether it was knowing how to trade or knowing how to invest money, and so they established their hedge fund, and from there, they were able to come up with all these, ideas, whether they wanted to invest in the cryptocurrency market or whether they wanted to invest in the equities market, etc. And because you have thousands of strategies trading, meaning thousands of hedge fund managers trading in the US markets, it allowed the markets to grow exponentially. And this is very important because when you have 5 people at the investment bank making all the big decisions on which area that they're going to invest in, that's very bad. What about all the other areas that could have been highly successful? And in addition, they could also be very wrong. So that's why the hedge fund industry is growing to what it will be and what it is. And so this is the best time for you traders out there to establish your hedge fund. It doesn't cost a lot of money. You could find a company that will handle your legal advice and your filings in Florida. And it will only cost you under, let's say, $15,000 or so, maybe even cheaper. So it's up to you to start that. You don't need the $50,000 or $100,000 like everyone's been charging. There's a lot more people doing templates for hedge fund startups. So at this point, once you do establish your hedge fund, and you waited the 3 months that it took, however, whatever long it takes, you need to study exactly what questions investors ask. And this is very important because you need to know these and how to answer that. So let's say that you don't have an Ivy League education and you want to establish your own fund. Well, it's up to you to do your research and to analyze, well, really, how many hedge fund managers actually have an Ivy League education? It's not that many. But investors, they ask very elementary questions based on their experience and what they're used to and what they think they know. I believe that education really has nothing to do with the hedge fund manager's success. Because you have people like Richard Dennis, Thomas Gann, that were incredibly successful. And because of that, it's not necessarily that the person that goes to an Ivy League school, meaning the person has a short-term memory, huge short-term memory, who could pass a test and go to an Ivy League school and get A's throughout it. Those are the kids that actually go to those schools on their own merit. Of course, you have kids like my friends who got because his father was the dean or his father put 20 million, etc. Those are the very lucky students that get in because of who's their parents, or sometimes their parents went there. So education, don't let it stop you from establishing your own fund. Investors should really be asking, what did you improve in your strategy and how is your strategy gonna shine? The only way to really see that is in your returns. And so instead of investors out there asking what's your experience as a trader, meaning where did you work previously, unfortunately that's also another horrible question because it really means nothing. Just because someone was a trader at an investment bank or let's say a hedge fund, it doesn't mean that they're going to be successful as a trader to own their own hedge fund. So again, you need to create a track record, and this is very important. Even if you have to start off trading by yourself with very little capital, you could scale that up to a certain degree. Just don't worry about it. It affects you when you get into the billions, into the 100 millions. My theory suggests their AUM should have no more than $1 billion, and we need thousands and thousands more hedge funds trading the markets to create that creativeness, because you won't have all the traders following each other. At the investment bank, those traders are following each other because they're all listening to the same meeting in the morning, and that's very, very bad. When you have thousands of hedge funds trading capital separately, independently, those are thousands of different minds, different neurons, different abilities, and different creativeness, and different talents that create a really strong market. And that's why we need a lot more hedge funds out there. So again, don't let your education and your experience pull you back in establishing your fund. You could also find an administrator and a hedge fund accountant that charges half what the normal company charges. And there's companies out there that when you start out, they'll want your business. So they will give you a really big discount. It's very important. Next, you have to get past the fact on who's on your team. Don't just put anybody on your team just because they have qualifications such as risk management. This person's been the director of risk management. That person worked for another hedge fund who was this and that. All that means nothing. An investor should look at the returns of that hedge fund manager and analyze those returns on how well that hedge fund manager did in all the different type of market conditions. And based on creating a portfolio of hedge funds, you have to analyze that and how it mixes together into a portfolio, etc. The risk manager is not going to help you improve your exit strategy. That's up to you to improve. And it is up to you to read everything you can, to write down everything that you do in each trade, why you did it, everything. That's what I used to do when I was trading for myself. And that's how I improved my exit strategy. It's very, very important. So those are important questions that you should think about. And as a hedge fund investor, you need to overlook those traditional questions that you ask. A person's experience is not their talent. You should be asking and looking to see what their talent is in order to see that it's in the returns. Looking at a person's education and prior work experience, it's not going to give you really an indicator of their future success. And the fact that whether you trust them or not, unfortunately, you have to get past that tribal mentality. When you meet these hedge fund managers, you should already have an indicator whether you're going to invest in that fund or not. And you should have done your research in the hedge fund returns. Because when you meet them, what's going to block you is their personality, whether you have rapport with that person, whether that person comes off as truthful or not. Some people don't have that skill or that ability to sell the product. And only very successful salespeople have that ability. But that doesn't mean that the hedge fund is not going to produce really nice returns. Just because that trader or that hedge fund manager didn't give you that indication when you met them. So again, you need to be very careful when you select funds based on meeting the hedge fund manager and doing that split-second psychological thing that we all do. I studied psychology, so I understand this. And when you sell a product, when you buy a product from someone, you're putting in your mind whether you trust them or not. And that's that's not good, because anyone with that personality could sell you anything. And so again, you have to rely on their returns. As a hedge fund startup, you need to know how to get past these questions. You need to know how to persuade your clients to say, okay, so enough with asking me about my experience and my background where I worked, but how about you ask this question? What are my talents? And you express those talents, what you have improved. It's really important that you say these things, because the herd mentality is what we're all familiar with. These investors, meaning the ones that are allocating capital continually to hedge funds, those are the people in the industry. It doesn't mean that they're right or wrong. It simply means they all do the same thing. They're herd mentality. So if you want to get past these questions, you need to know how to answer them. Because Sam Bankman-Fried, somehow he got them to overlook his experience because he had no real experience. He got them to overlook the people on his team because he didn't have a team like a typical hedge fund investor would look for. Like, oh, where did that hedge fund manager work before? Does he have a risk manager on his team? Was that risk manager the director of a big group? Or where did he work? What about the salespeople? All these stupid questions that they actually ask. Sam Bankman-Fried was able to raise $40 billion in 2 years. He was in his early 20s. So don't ever let age stop you from starting your hedge fund. Thank you so much for watching me. Please remember to subscribe to my channel. Do thumbs up. The buttons are there. Please press them. Thank you so much. But that will really help me out.